With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB. It is the 29th of April. I'm Nadine Blaney. So it is, well, quite the day out there, really. If you take a look at the CBOE Australia Index, which has closed, we have seen the market continually push higher throughout the day today. I mean, yeah, faded a little bit around 3 p.m., but that's a pretty picture to be painting on this Tuesday, on the cusp of 100 days of Trump tomorrow, which brings 100 days of Trump. We still have a lot of trade, we'll call it tension out there. We've got a new Prime Minister in Canada promising to take on Donald Trump and his tariff regime. But we've seen this market not trade this high since the 7th of March. So the S&P ASX 200 well above that psychological 8,000 level today and beyond. So we will continue to digest the market. I do have Martin Crabb, CIO at Shaw & Partners, here with me in the studio. Miners quarters, boy, that really dictated some moves on the market today. And of course, we've got the big inflation read tomorrow. I had a good chat with Paul Bloxham, who's the chief economist of HSBC here in Australia. That's up online if you'd like to listen to it at ausbiz.com.au. He says, looks baked in that we've got a interest rate cut coming when the RBA meets next week. But he said with the inflation data going the way that it is, it would be unsurprising to see confirmation tomorrow that the inflation situation is well within the RBA's target band. So really giving them no excuse to sit on their hands when they next meet. And of course, I mentioned the Canadian election. We have had Mark Carney emerge victorious. So the incumbent party maintaining leadership, and that is despite being, way behind in the polls before Trudeau stepped down. Mark Carney, of course, led the Bank of Canada as well as the Bank of England, and not forming majority government, it looks like, but real endorsement of the Canadians' feelings about Donald Trump continuing to call them the 51st state. But beyond that, I think it's really interesting because if 2024 was the year that the incumbents were being kicked out and it was impossible for them to win, well, looks like we've got perhaps an incumbency in Australia as well. So we'll talk about what that may mean for markets. Sector-wise, today, energy was the winner. We did see the likes of Woodside advancing, but Beach, in the wake of its production report, looking really strong, up by 4.7%. Interesting when we've got such a big week when it comes to tech in the United States, those Mag 7 reporting. We did see the tech sector outperforming today. WiseTech up by 2.2%. I'll get to some of the news from the mining and the materials space, but pretty solid performances coming through here. South 32 up by 3.3%. The exception to the rule, interestingly, a traditionally defensive sector being consumer staples, although we did have the news that Endeavour Group finally will have a new CEO, well, beginning January 2026 at least. So you saw Fortescue doing well there, gained on strong quarterly iron ore shipments. We had a lot of quarterly reports coming through. Boss Energy was pretty upbeat on production results, and that dragged some of the other uranium miners up with it. Northern Star, a real exception to the rule though, fell on lower quarterly gold sales and higher cost guidance. So proving even when the price is working in your favor, execution matters when it comes to these miners. Ramelius doing well in the wake of its quarterly. Sandfire improved quarterly performance, driving the share price to $10.27 there. Check this out. Mineral Resources having a great day, up 14%. It's appointed or looking to appoint a chair, so making progress on that front, as well as saying that it will cut jobs. Whitehaven Coal hitting a 2-week high as that third quarter output beat analyst estimates. And Endeavour Group, as I mentioned, Jane Hrdlicka, so the former Virgin Australia CEO, taking over that. In the smaller end, we had Loomis Diagnostics hitting a 2-month high on upbeat third quarter results. Change Financial also soaring on record third quarter revenue and medical development. So MVP rising 26% in the wake of its quarterly. So some pretty punchy moves there. But the stock of the day today was Woodside. Let's hear from Francesco Distratis from Ord Minnett and Michael Wayne from Medallion in the wake of that final investment decision being made for that Louisiana project.
But a lot of good quality assets at the moment producing gas and oil for that matter in the lowest sort of 20% of costs in the world. They've got established markets in place, but if you look at their production profile over the next sort of 3 to 5 years prior to this announcement, it was starting to sort of top out. So many had been sort of suggesting that that was a negative for Woodside compared to someone like a Santos who had a lot of these growth projects in the pipeline. So this may, to a degree, alleviate some of those concerns. Obviously, it's not going to be adding to the bottom line until 2029. That's still a fair way away.
I think the thing to watch going forward with Woodside, look, they've got a lot of good projects out there that are just generating good cash flow, and that should support the current dividend regime that they're on. But going forward is monitoring that CapEx. And as we know, these projects, the budget for them and the capital expenditure for them are calculated a long way out before drills get put in the ground.
So that gets some of the day's news and the share price impact out of the way. Let's get to the analysis, so the why behind it all. And for that, Martin Crabb from Shaw Partners joins me now. Martin, good afternoon to you.
Hello, Dave.
What do you make of the market's performance today? That was pretty punchy. Quite the recovery.
Yeah, it seems buy the dip is all the rage, isn't it? We were just saying off air that if you look at the market low on the 7th of April, which is where we opened after the big sell-off on Wall Street, the market's achieved that level and beyond. We're back up above that level that we had on the night before the what are we calling it? Liberation Day. This V-shaped thing, this V-shaped market move that we've seen so many times in this bull market, is the market pulls back on some bad news. We had a sell-off in October last year. You can see that sell-off in July last year. The market gets spooked by something, and everyone just buys the dip, and so that's exactly what's happened. I think I had a look this afternoon. There's only one stock in the ASX 100 that's below its level at the low, and that's Lendlease. Lendlease has continued to go down. So just about anything you bought on the 7th of April has gone well. And a really good illustration of how fickle this market is Paladin. We were talking about Paladin a week ago.
Yep.
It was $4, and it was like, my God, this stock's getting barbecued. It's come out, it's suspended guidance. They then come out with their quarterly, and the stock's $6.30 something today. It's gone up 50% in a week. It's like, that's what this market's like. It's just a little bit of bad news gets absolutely smashed, and then there's a recovery, and it's so swift. That's obviously a very shorted stock as well, so there's lots of turnover in that name, but just shows how fickle this market is and what a leading energy company can go from $4 to $6.30 in 1 week.
So fickle, it's not necessarily a compliment. Is this the next phase of some sort of a bull run, or how do you read this?
No, look, I'm still in the sell the rallies, not buy the dips, and clearly that's the wrong strategy right now, but I still think we're in this twilight zone, Nadine, between the soft data and the hard data. So what do I mean by that? The soft data is things like surveys, and they continue to come out. I think there was Australian Consumer Sentiment was out today. Most of the survey data is pointing to a pretty rough economy, but the hard data, which is jobs and sales and orders and those sorts of things, are still looking pretty good. And there's this element of, well, everyone went nuts to get in before the tariffs came in. So a lot of US retailers stocked up on goods. A lot of consumers that were thinking about buying something sort of rushed ahead to buy it before the tariffs came in. So now the tariffs have come in, we should see activity really start to slow, but we haven't seen any hard data yet. So the strategists like me are saying, well, we need to look at the soft data. The soft data is telling us things are going to get a lot worse. We've got consumer sentiment, business sentiment, capex intentions, all those things going south in a big way. I think there was the Dallas Fed number out last night that was back to sort of COVID levels. Yep. But we're not seeing it in the hard data, and we were thinking that reporting season would start to show it up. And there has been a couple of companies like Brambles the other day.
Brambles, Flight Centre.
Flight Centre's definitely downgraded again. So, but we're not really into the teeth of reporting season yet in Australia, and and this is a big week for the US, but mostly on tech. So I think it's really tricky because if I follow the hard data, I'm long the market, I'm buying the dip, everything's okay. Trump's going to wind back his tariffs. He wound back autos last night. It's all going to be okay. But if I'm sitting here looking at the soft data going, well, these surveys are telling me things are going to get tougher. So we've raised a bit of cash. We're sitting a little bit defensive in our multi-asset portfolios, but clearly that's the wrong strategy at the moment. You should be, most the investors that are doing well are the ones that are buying the dip.
But you don't mind sticking with your strategy because you're anticipating?
Yeah, look, the way I think about it is, if I'm wrong and the market grinds high, well, I'm still invested. It's not like I've completely cashed out. I've just raised a bit of cash. So I give up a bit of return on the upside, which I don't think is the end of the world. I'll still make some money. I just won't make as much as I could have. The thing is, if I'm right and things really go south hard, then I'm in the right position. So I think the downside risk is more of a concern to me than missing out some upside. So that's really the art of portfolio management. It's trying to get that balance right. It's saying, well, the odds may favour a continual grind higher and a wind back of tariffs, etc. But if they don't, I want to have some strategies in place to take care of that. So if the market does sell off and I'm sitting on cash, I can do some bargain hunting. And there has been some bargain hunting back on the 7th of April. We might go back and see some of those levels again if it looks like those tariffs are going to hold and Trump doesn't do deals, because everyone's waiting for these deals to happen. If we don't see deals in the next couple of weeks and companies that come out say things are getting tougher, we'll see another leg down to the market.
Well, we've got this data, hard data in the US this week, jobs in particular, that we'll be keeping our eye on, but we've got inflation data here tomorrow, which now I know that the assumption is that the RBA will cut come May. I think that the global situation has given them the opportunity to do so. But I mean, the data is looking better on the inflation front. And Paul Bloxham today from HSBC, his assumption is that the tariff situation will be disinflationary for Australia regardless.
Yeah, and the view is that unless you're in America, you're probably facing price deflation because those goods will find a home in countries that don't have tariffs. So we will get more flow of global trade coming our way because we're not tariffing imports, whereas the US is. So all of those goods and materials that are going to the US find another home somewhere else. So central banks outside the US have the luxury of saying, well, we're in restrictive monetary policy at the moment. So the RBA think that the R-star, the neutral rate, somewhere around 3.25, so we're sticking at 4.1. The market hasn't 100% baked in May, but it's pretty close to. And then you can see that the path comes down well below where we think. We're still seeing a terminal cash rate about 3.1%. The market's saying actually the RBA goes beyond that. The RBA goes into stimulatory territory. So the cash futures are, this is weird, the cash futures are pricing in a recession. The equity market's pricing in continued strong growth. So one of them's wrong. So we're thinking that maybe we need to take our lead from the cash market. So we'll see a cut in May, we'll see another cut in July, we'll see a cut in August, and we'll see a cut in November. So we'll get 4 cuts this year, we'll get 3.1% cash rates. That's what we think, that's what a lot of the street thinks. George Therineau at UBS, who we call the rate whisperer, that's what he's saying. So, but the market's saying that they go beyond that and start to cut. So the cash market's worried about a recession.
Okay, one data point that came to my attention today was wine exports. But Treasury wine estates, which you would think would go gangbusters off the back of that, only up by about 0.75%.
Yeah, I think this is probably one of those stats that's in the market, i.e. the market already knows about it. So Wine Australia came out today with their export data for the 12 months to March, and it was up some astronomical number, 44% or something. But volumes are only up 6%. So it's like there hasn't been this sort of, people racing off to the bottle-o. It's been more about the value traded. So here we've got the average price per litre, and I don't know about you, Nadine, but I don't pay $4 a litre for wine. I pay a lot more than that. I pay like $15 for a 750 ml. So this is obviously the wholesale price of wine. But you can see
now we know how cheap it is.
Now we know how cheap it is. Just go and buy it in bulk. But you can see that the price dipped as China came out of the market in 2020 and 2021 because they're the big buyers of luxury wine. So the volume was holding up, but it was mostly cheap wine. And the recovery we've seen is the impact of China coming back into the market. So all that Penfolds Grange and Bin 389 and Hill of Grace and all that really expensive wine is now being shipped into the Chinese market. So I think the price index is up over 30%, and yet the volumes are only up 6%. But it's a good news story. But I think the Treasury Wine Estate price has already factored those sort of things in. I don't think that's a new story. It's a good story for Australia, but I think it's already in the price of TWE.
Got it. Now, just a thought, Jane Hrdlicka has been appointed the CEO of Endeavour. They've been looking for a new CEO for quite some time. She has history with the company itself. She used to work for Woolworths. She was involved in their early liquor, situation. And she did pretty well with Virgin Australia, bringing it out of administration. Is this sort of a new start for Endeavour once she gets there, not January 2026?
Yeah, and people are already calling her Jane Hardliquor, which is
I thought that was quite clever.
Which is quite clever, and so that's going to be her new nickname, whether she likes it or not. Look, she's got form as a pretty effective manager. She's had some pretty tough gigs before. I think Endeavour's a particularly tough gig. I think the demographic shifts are not favouring the consumption of alcohol, particularly through hotels, which is a big part of Endeavour's business. Obviously, Dan Murphy, I think the Crab household single-handedly keeping Dan Murphy going. But Dan Murphy's is a great business, but it's got such a big market share already, it's hard for it to grow much. So I think on the food, beverage and hotel and gaming side, that's really, really struggling. I think young people just aren't going out and drinking as much. I saw a stat that said Gen Z's alcohol consumption is about 30% below, our generation. So people just aren't going out to pubs and clubs anymore, and there's a lot of them that are closing down. So I think Jane's going to have her work cut out, but I think the market's going to see her as a pretty solid choice for the gig.
And so as we wrap up this session, and it looks as if we will be, at well above the 8,000 level. Yeah. Do you reckon we can continue it even through this week with these U.S. earnings and the tariff situation and the data? There's so much for the markets to climb. Like, we've climbed this wall of worry.
Yeah, look, I'm very surprised by the market action. It's just clear that the market's taking a buy the dip mentality. So, if we continue to see even small messages out of the White House, whether it's Scott Bessent or Donald Trump or Navarro or anyone else, just walking back some of the hard line on the tariffs, then the market will respond positively to that. I think the market is already pricing in lack of earnings guidance and maybe a few CEOs coming out saying things are getting tougher. The risk is potentially on the upside. If all of the tech companies that report commit to their CapEx plans. I saw IBM last night, said 150 billion they're going to spend in the US over the next few years. So they're big numbers, right? So if you get the Nvidias and Facebook and Google and all those guys recommitting to the CapEx plans, the market will take that positively, because some of those stocks have been really beaten up. Some of those Mag 7 stocks have been really beaten up. So it wouldn't surprise me. I still think, as I said earlier, Nadine, the thing that is preoccupying me is the risk to the downside. So, but I wouldn't be surprised if the market just takes this walk back on tariffs as a reason to buy stocks.
Got it. Martin Crabb, CIO, Shaw & Partners, thank you as always.
You're welcome.
All right, so lots in that. We'll post this if you'd like to listen to it again. But Martin always brings us these great charts to illustrate some stuff that maybe we missed on our own. I missed that wine thing. Let's take a look at some of these market leaders. And we've already talked about a lot of this. So it appears that Boss Energy, there's just been a real shift in sentiment toward these uranium plays. Credit Corp, interesting. I haven't actually followed the news for Credit Corp. I'm not seeing anything really associated with it, but up by 6.5%. I did a really interesting interview with Luke Laird from Seneca Financial Solutions earlier today. He named 2 financial companies that he would love to own over even CBA. This time last week, if you remember, Martin and I were scratching our heads why CBA was up by 4%. Look, Northern Star, we already talked about that. Auckland saying that it's going to build another runway. James Hardie still on the nose after making that U.S. acquisition or intending to do so. And A2 Milk off by 1% in the small to mid-cap space. Antares Technologies up by 14%, flipping the page, taking a look at some of those that did lag the market. and 29 Metals. It was out with a production update as well today, down by 10%. So clearly the market's not liking something in there. Look, what's happening tonight? We do get this data, so a read on jobs with JOLTS. We get the Conference Board Consumer Confidence Index. We get earnings from Coca-Cola, from Visa. We get them from Spotify. In fact, some of the European results have already started coming through. So look, we've got Adidas warning of higher costs from US tariffs, but confirming its outlook. We've got HSBC launching a $3 billion buyback after a first quarter profit drop. So don't forget, we've also got European earnings as well. Here tomorrow, it's all about inflation. So that happens at 11:30. We'll cover it here live for you. We get private sector credit as well. And we get a sales update coming from Coles. We get quarterly production reports from the likes of IGO and Origin Energy. Okay, so here you go. That is a pretty picture being painted by the CIBO Australia Index. It was even just as good, I was going to say better, but just as good for the S&P ASX 200, which closed at 8,071 points. Mostly positive at around the region. And taking a look at E-minis in the US, just hanging on to positivity, but oil coming under pressure, as is gold. Plenty to digest in the overnight session, and we will bring you analysis of that from 9:45 tomorrow. Hope to see you then.